Hello traders, this is Jeff coming at you with another video trading lesson from thestockbandit.com. You know, there's always something being taught to us by the market, so let's take a couple of minutes here and ask ourselves, what did the market teach us today? Today's lesson is going to revolve around price gaps, which is what happens when price begins today at a different price than where it ended yesterday. What happens when that occurs is that a void is created on the chart, and that's what we refer to as a gap in price. Now, for more information on gaps, just visit this page, or you can Google the phrase stock gaps, and you should see this page listed at the top of the search results. Now, there are four kinds of gaps: common, breakaway, runaway, and exhaustion. The common gap is, well, the most common. These occur frequently with slight changes to start the day from the prior day's closing price. Oftentimes we'll see price revert back to the previous day's close, thereby starting to fill that gap. And one thing to note about these common gaps is that they do frequently fill to some extent. Now, if they don't fill all the way, it's typical to see at least a partial fill. If this were a day trading 101 type of class, I would write it on the chalkboard that opening gaps tend to fill quite often. And for us as traders, what that means is that when we see a gap up, it makes for a higher risk buying environment. So higher risk, you say, is that actually correct? Well, yes. There's a major psychological element involved with gaps, but rather than simply discuss those details, let's take a look at the current market situation and you'll get a much better understanding of what I mean. We'll start out by taking a look at the Nasdaq and the overall situation that's we're currently finding ourselves in. Right now we're in a 3-month trading range, and you can see that is well defined with two horizontal white trend lines on this chart. We saw a recent pop 2 weeks ago today that saw no follow through, only some sideways price action and a slight drift lower. Then last week ended with a decline on Friday, followed by another decline on Monday. This morning, on Tuesday morning, we saw a gap up, and what that does psychologically is offer those bulls who have been waiting on an upside breakout from this 3-month trading range, it offers them a second chance exit for closing out their long positions. Now, those who have been holding stocks anticipating a move higher are starting to get the sense that maybe we're not going to get that, at least just yet. So an opening price gap offers them a chance to sell those long positions at slightly better prices and raise cash and move to the sidelines. Now here's a look at the Nasdaq chart on an intraday basis. These bars are 3-minute time frames, and you can see the very large gap in price here, which is the void between Monday's closing level and Tuesday's opening level. Now, very minimal upside was seen Tuesday morning with the early strength, and instead price reverted back and trended lower continually. Now, last night at thestockbandit.com, inside the member area, a pair of day trade candidates were listed for potential plays today. They both happen to be on the long side. However, the morning strength caused each of them to gap higher, and we waved off the trades in the pre-market, seeing that early strength that they were starting to find, basically because we were unwilling to chase these stocks higher. Here's an example. One of them was SOLF, S-O-L-F, Solar Fun, and you see a lot of these solar stocks have been making very big moves lately. This particular chart is an open, high, low, close chart, and you can see if I move to a 3-minute time frame that this stock gapped up this morning, which put it well above our trigger price that we had initially planned to use as a pivot for a buy. And instead the stock began to trend lower throughout the day as it came lower and attempted to fill that morning gap. Taking a look back at the daily chart, you see today's bar began above the white trend line, which we were going to use as our purchase price, and is now back below it. So it's a good thing that we passed on this trade, and I guess that early morning gap up in price is what bailed us out of what would have been a poor trade. So today's lesson is this: don't chase gaps. Make price gaps prove themselves worthy of trades by requiring them to hold or show some follow-through. If you don't see it, you might even consider the occasional fade trade, but we'll discuss that another time. I'll see you back here soon. Trade well out there.